Good morning and welcome to Charting the Markets on Friday, the 18th of August 2023. On Thursday, China property giant Evergrande filed for US bankruptcy protection as the real estate crisis in China deepens. And this will allow the heavily indebted company to protect its assets in the US as it works on a multi-billion-dollar deal with creditors. And what we also saw is that the People's Bank of China set its so-called fixing at 7.2006 per dollar, compared to an average estimate of 7.3047 in a Bloomberg survey with traders and analysts. And that was the largest gap to estimates since the poll was initiated in 2018. And this followed hawkish FOMC minutes earlier this week, which led to long-dated US bonds heading back up to levels last seen in 2008, all of which had a negative impact on equity markets in Europe and in the US. And earlier this morning, we had UK retail sales out, and these dropped by 1.2%, I should say, in July compared to the months before, and came in much worse than was expected at 0.5%, as a 0.5% fall. And it came after also a downwardly revised 0.6% rise in June. And you can say the impact of this on the FTSE 100 daily chart. As you can see here, we keep on falling, and we are now on track for our sixth consecutive day of falling prices with regards to the FTSE 100, with it now heading back down again towards the July low at 7,228. So this is critical support because, as you can see here, together with the low seen back in March after the US banking crisis, here at 7,204, that area offers really, really important support. And if it were to give way, and that's a big if, of course, but if it were to give way, as you can see here, we would then be falling through all our 2023 monthly lows, which would then open the way up for the low seen back in July of last year, around the 7,000 mark to be reached. So watch this space in the days and weeks ahead, because the approach of this key support area between 7,228 and 0.4 is really critical for the FTSE 100 and for its ensuing medium-term trend. And the story is quite similar in Europe. If you look at the CAC 40, as you can see here, the French CAC 40 basically is approaching its key support area going back to June of this year between 7,083 and 7,053. And if it were to be fallen through, we could be heading back down again towards the March lows at 6,778. So that is a distinct possibility, but perhaps we'll actually hold in this support area. We'll have to see. But what is happening right now from a technical perspective is that we are sliding through the 200-day simple moving average, and it looks as if we might actually today, on a weekly chart closing basis, because it's Friday, close below that 200-day simple moving average, which technically would indicate that it is likely that we will see some further declines over the next few days and weeks. So again, watch these critical support levels from a technical perspective, because if they were to be broken through next week, we could see some acceleration to the downside. And the same is really happening in the US. If you look at the NASDAQ 100, which had been the great outperformer and still is actually year to date, as you can see here, we're now testing the lower end of our downtrend channel we've been trading in for the last month or so. And we've now reached 2 months lows, taking us back to levels last seen in mid-June. And we are also heading towards the late June low at 14,689. And that level, as I'm actually speaking now, is being broken through, which would mean that the next level, which is the May high at 14,530, will be eyed. And then we'll have to see whether we can hold there. And if not, we've got these lows going back to late May and also early June between 14,233 and 14,212, which could offer potential support going forward. And we'll have to see whether we can hold there or not, because after all, next week we've got Jackson Hole, and Jackson Hole obviously is going to be very important on Thursday and Friday. And the week after, we've got the non-farm payrolls data out as well. So equity markets at the moment over the summer months seeming to be in the corrective phase, and we'll have to see whether short term we can hold at these recent support levels or not. The US dollar has been strengthening over the last few weeks and is on track to once again end this week on a positive note. And the euro has been sliding. And if you look at the euro versus the British pound, for example, this being interesting because earlier this morning we had the UK retail sales coming out with a drop of 1.2% in retail sales for the month of July due to wet weather and concerns to do with cost pressures. And that basically has put a dampener on the British pound. And as you can see here, the euro versus the British pound has benefited from that weaker UK retail sales data out earlier this morning. And we are currently bouncing off just above that key support area that consists of the mid-June and July lows between 85.22 and 0.4. And we'll have to see whether after these 5 days of consecutive falls we've seen before today's bounce, we can now actually recover some of those losses in the euro sterling pair and perhaps head back up again towards the 55-day simple moving average here at 85.87, and perhaps also reintegrate this previous sideways trading range which we've been trading in since June of this year. So at the moment we seem to be bouncing off the lower boundary of these sideways trading ranges we've been in over the last few weeks. And with regards to the British pound against the US dollar, as you can see here, we have come off the high which was made back in July at 131.42 on this day in financial bet, and did rise over the last few days, but earlier this morning the UK retail sales data has put a dampener on proceedings, and as you can see here we've actually failed at the orange line, the 55-day simple moving average of 127.60, and seem to be heading back down again towards the 126.87 low. That's a minor support level going back to late June, and that also ties in with the May high at 126.79. So we've got some minor support in that area, and then more significant support with regards to the early and mid-August lows between 126.21 and 17. As long as this holds, we will remain in a sideways trading range. But if that support area were to give way, it is quite likely that we could be heading down again towards the red line here, the 200-day simple moving average at 123.81. So that is a distinct possibility for the British pound going forward. Moving on to the Japanese yen, and what we can see with regards to the Japanese yen is that after 8 consecutive days of gains for the US dollar versus the Japanese yen, and us hitting this 146.56 high, taking us back to levels last seen in I believe November of 2022. Yes, that is correct, as you can see here on the weekly chart. After all of this upward momentum we've seen over the last few days, we are now starting to, short term at least, top out as Japanese inflation hit a 42-year high earlier this morning, with the Japanese inflation rate remaining unchanged at 3.3% in July. But it was notably higher than the market forecasts of about 2.5%. And that helped the yen appreciate and meant that we've come off this top we formed yesterday at 146.56 and retested the June high at 145.07. And so far we're holding there. But from a technical perspective, as you can see here, we are still in a series of higher highs and higher lows, so still an uptrend. And it is far more likely that even if we were to short-term see a correction or a sideways trading range, that the upward momentum in dollar yen is to continue and perhaps take us towards the psychological 150 mark in the following weeks and month. Commodity markets have been affected by the rising dollar over the last few weeks, and you can see the impact of that on the gold price, for example, when gold has actually come off quite a bit. I'll show you that chart in a minute, but before I do, I'd like to also mention crude oil. And as you can see here, crude oil prices have had a very strong ascent since the end of June, taking us to $84.39 on WTI. But since then, we've actually come off, and this was on the back of worries to do with Chinese demand, Chinese growth being much weaker than what we expected it to be. And also earlier this morning, we had some, actually yesterday, we heard that the giant Chinese property developer Evergrande had to file for US bankruptcy protection. as the real estate crisis in China deepens, and the effect of that on equity markets is at the moment negative, with risk-off sentiment dominating basically, and we'll have to see whether there will be further stimulus packages by the Chinese government to help its flagging economy. But if it doesn't do so, then perhaps growth in China will come in much lower than we had expected at the beginning of the year. And obviously that will have an impact on growth in other countries as well. And especially with regards to the oil price, what we're seeing here is obviously if demand for oil in a flagging economy in China is going to diminish, that will have a negative impact on the price of oil. Oil prices coming down. This is what happened over the last weeks. And also the fact that the FOMC minutes, for example, were still very hawkish this week, also put a dampener on future demand outlook with regards to oil consumption in the United States. So with the two greatest oil consumers in the world basically struggling at the moment with regards to potential future growth, or at least the demand for oil being dampened, the price of oil has come off, and we've tested more or less the early August low at $78.53, have held there so far. But if we were to fall through that level next week, then as you can see here, we might have formed a top formation, and that could take us back down again towards the highs seen back in May and June between $74.70 and $73.82. So that's a distinct possibility. And on the way down, we also have, as you can see here, the red line, the 200-day simple moving average at $76.11, which is a possible downside target as well. But right now, so far, we're heading, we're holding around the $80 psychological area, and we'll have to see whether we can hold next week above $78.53, the early August low, because as long as that's the case, we may see another attempt at the upside. But right now, it doesn't look that likely. It looks as if further downside is expected by market participants with regards to the price of crude oil. The gold price, as I've mentioned, has also come off over the last few weeks as the US dollar has strengthened. As you can see here, we have a very clearly defined gradual decline take us through the 200-day simple moving average at $1,907 per troy ounce. And we've now had two consecutive closes below that, which is actually quite negative. And the fact that we also slid through the June low at $1,893 per troy ounce is also not very positive. So where could we get to with regards to the oil price? Well, if you zoom out, you can see here that the next possible support area comes in at the mid-March gap that we formed on this chart. And that gap was a runaway gap at the beginning because we had a fast acceleration to the upside, but we may still close this gap going forward. And it comes in around $1,872 and $1,870. So that's a possible downside target short term for the price of gold. And then we also have the early March high at $1,859, which is another possible downside target for the price of gold. But as you can see here, provided we stay below this 1.5 month downtrend line, further downside looks to be likely. And only if we could reverse, and it doesn't look likely at the moment, above the red line, the 200-day simply moving average of $1,907, could we see some stabilization in the gold price. But right now, it looks as if further downside is on track. And last but not least, I'd like to basically also mention very briefly the price of, let me just zoom into this, of natural gas, because natural gas futures have been quite volatile of late. And as you can see here, we had an acceleration to the upside, take us to $3.05 at the beginning of August. Since then, we've come off again, and we are now sort of trading sideways. But if we were to fall through Wednesday's lower at $2.65.50, then the orange line here, the 55-day simply moving average at $2.64 would probably also be fallen through, and we would probably retest the June to August uptrend line, which currently can be seen here around $2.57. So that is a possible downside target for the next 2 days with regards to the price of natural gas. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on Twitter. My Twitter handle is @AxelR_IG.